All right, recording.
Awesome. Well, welcome everyone here. I appreciate you guys coming in tonight to go ahead and go over this 58 unit commercial presentation. It's a great opportunity, so appreciate you guys sharing your time with us today. What we're about to share is really an opportunity for you guys to be able to venture into a partnership with us into some really good properties that I think you guys are going to be excited about once we break this down. We're going to make it really plain and simple as well, so it's easy to understand, even for someone that's new. The other thing that I wanted to also let you know, if you're not a seasoned investor, it's okay. Everyone's welcome. What we try to do is get you involved in the game. So this is just a learning curve for some of you. For some, you guys are vets already. But for those that are not, this is a really good presentation that will kind of let you know the flow of how easy it is to get to commercial deals when you find really stabilized deals that just make sense, that are net cash flowing right away. We're going to be talking about some properties that are going to be in two separate areas, but they're bundles. So they're coming from the same place. Roman, who's my partner here, and a few of the others are going to go as to how the deals were acquired and how they were able to be bundled up like this in the way that we purchased them. Everybody's going to go around and introduce themselves as well. So we're going to have a little bit of introduction for the team so that you guys can get to know everybody in the team that's going to be involved in making sure that we take this deal to a nice, profitable exit. I'm going to start with myself. My name is Marco Rivera. I've been in real estate just shy of 7 years. My main bread and butter is being a private money investor. I'm also a capital raiser. I've been able to raise a lot of capital over the years, and I've been able to venture into a lot of deals with a lot of individuals as well doing that. I do have a real estate portfolio as well that I'm able to, not have the hard work of managing. My partners do that for me. So, but I get to venture into passive wealth that way. So I'm able to own and be able to do a lot of tax write-offs that really help me. And this will be one deal that you guys want to look into that as well for yourselves. I also own a branding and marketing agency. I've been owning that for probably close to 15 years now. And it's allowed me to connect to a lot of individuals as well as make capital raising easy when it comes to that. I'm going to be also working on a couple of things here in the future for some other businesses that we're working on. But that's pretty much me and a jizz, just real quick, nothing too serious. I'm here to help fund this deal and manage the capital of this deal. That's my specialty. That's what the team brought me in here for. And so they're going to go ahead and introduce themselves here. Who would like to go first?
I'll go.
There you go. Okay.
Good evening, everyone. Thanks for joining. My name is Tim Lovelace. I'm located here in Houston, Texas, so down in the Sun Belt area. I've got a little over 5 years experience. First, I started out single family, so I currently own and manage myself a single family portfolio down here in the Houston, Texas area. In addition, I'm a general partner in a 48 unit here just north of Houston. And also too is I'm a limited partner on over 400 units in and around the Houston area and Atlanta, Georgia. One of the things on my part with this team is bringing marketing as well as some of the business needs to this deal. And I will say too, the interest that we've really tried to hone in on is these tertiary markets. We see a lot of value, cash flow and growth in these areas. So we think we've got a really good deal here to talk to you about and to gain your interest. So looking forward to more talking with you. Thank you.
You can jump in next if you guys want. So my name is Sergio Menino. I am located in York, Pennsylvania, so South Central PA. And my main job is I am a licensed real estate broker. So I manage a team of about 25 investment salespeople, and we focus on small multifamily exclusively. A little bit of retail sales and leasing as well. My background in investing is I'm actually a partner with Tim at the 48 unit in North Houston. I have a few single families myself and some small multifamily assets with Roman as well. My firm is full service, so we do asset management, property management. Currently have about 100 units under management, and I'm a partner in a 35,000 square foot retail portfolio, mostly made up of single triple net buildings and a few neighborhood shopping centers. So yeah, I partnered up with Tim a few years ago and Roman, and we are just trying to scale the portfolio in the larger multifamily space in some emerging markets.
And I'm the next one.
Roman.
All right. My name is Roman Kirchner. I'm located in New York. My background is a mechanical engineer. Then for 10 years was working for a Japanese company until they moved that business to Mexico. And then transferred to computer programming, was working for Bank of America till then. That business moved to India and start doing full-time real estate since 2005. I'm also licensed in Pennsylvania, licensed realtor. I started like a lot of people from single families, progressing to 4-family, 6-family houses in different areas. Currently, we have about 120 units under our ownership with another partners in Illinois. Constantly looking for new opportunities, and we would love to be in South, but it's a little bit too crowded, and the prices and the opportunities not that obvious. So we concentrating our attention on Midwest, and these two properties that we'll be looking at, it's exactly what we're looking at as a stability point of in current environment. So now we're ready to move along.
Yeah, absolutely. Let's go into disclaimers, guys, real quick, because this is important. We, want to let you know that all investments involve risk, guys. You guys have been in real estate know that. If you haven't been in real estate, it does have risk, guys. There's, potential loss of principal. The projected returns mentioned in this presentation are not guaranteed and are based on managers' projections, our experience. We've done this several times, so we can predict certain numbers that make absolute sense, but they're not guaranteed. So, they might not be numbers that may be realized. So past performance not indicative of future results as well. So just because we landed the last 15, 20 deals perfectly fine, no hiccups, doesn't mean it's guaranteed for the future. So just want to make sure that you guys are aware of that. Make sure you also do your due diligence. Investors should be conducting their own due diligence on any deal. You consult with your financial advisor, your attorney, or tax professional if you're looking from a tax perspective on getting into a deal that's going to give you a lot of segregation costs. You just want to do that homework on your own. And terms and conditions is the responsibility of the investors and managers, including the distribution of profits and losses, are governed by the terms outlined in the investment. So all information provided is the presentation is subject to change without notice, because nothing is guaranteed. So just want to go ahead and just let you guys just know those disclaimers real quick. Roman, did you want to go over Veles Holdings?
Sure, absolutely. Since I just mentioned that I established full-time business in 2005. Veles Holding is a branded name for all our investment. Obviously, each investment has a different LLC that is under, but we start operating in single family market, and we fully transitioned in multifamily markets in 2018. So we currently we have, like I said before, 120 units plus or minus in Illinois and Pennsylvania. Obviously, we're looking for different asset classes as well. We're not especially stick to the residential, but we have most of the experience in residential multifamily. Between all of us, we have more than 30 years of real estate experience, and what is important is that, and that's what you want to have in your team, is at least someone who has full-time interest in that, and that's me and Sergio. We full-time business owners dedicated 100% 24/7 to this business. What's good about us, we never lost investors' money, which creates credibility and confidence, and we have no complaints, and we can always refer our clients to anyone who wants to take a look at that.
Nice. Thank you. Thank you. All right. So let's get into it, guys. You already went over the track records.
Yeah,
that's Veles Holdings.
Yeah, that's our latest, I would say, acquisitions. All of them basically in Illinois. It's around Chicago area. It's not most landlord-friendly state, but if it's not landlord-friendly state, it should be tenant-friendly state. People living everywhere. That's our philosophy. If people live in there, if it's a tenant-friendly state, the state should pay for that. What I mean exactly, that state basically, we like subsidies, like Section 8 or other type of subsidies. At least certain percentage should be allocated to that type of tenants, and especially in C-type area. So in this case, we more or less guarantee that our expenses will be paid as a mortgage and utilities and all that stuff, other stuff. All those properties still under our ownership. We're managing the managers, so the different property has a different management companies, and we constantly on the management calls, we constantly coordinating our expenses and income through the management company. We have weekly management calls to all of those properties. So, and all of those properties are actually located in the similar area. It's a C-type area, C-type of property, which is most affordable and most desirable for a lot of people.
Nice. All right. Thank you, Roman. Thank you for that. Now what we're going to do is we're going to go into the investment opportunity. Tim, did you want to touch up on this?
Yeah, sure, no problem. So we are combined. The purchase price is $5.875 million. We've done a 30% down payment. We're looking for a $2.2 million capital raise. Through our underwriting, we've calculated an annualized return of around 19%. And so, in specific to more of the details, we've calculated that a cash-on-cash return of around 9%. We will be offering investors a 7% preferred return. With that, right, we know there's tax benefits. We'll be doing a cost segregation study. We'll get into more some of the detailed tax benefits later. And ideally 5-year hold on the deal, and a minimum investment of $50,000 is what we're looking for the deal.
Perfect.
And actually, just to add one, the cost segregation is beneficial for 5 years investment anyway, so that's the holding period that will benefit everyone. It's just a small addition.
Correct. Correct. Now this is the rental market overview for both the assets, the one in Missouri and the one in Kansas. These assets are only about an hour apart from each other. As you can see there, the cap rates purchased last year and this year for both the properties, the vacancy at 90% occupancy, 94, 96 for the Kansas. These are, again, operating already. They're cash flowing, they're netting, day one. So that's really nice that you'll be able to just get right into it and be able to, be a part of that. The rent growth, we are going to be, bringing those rents up because these two properties are actually a little bit below rent. So there's room for rent increases, about anywhere from 150 to 200, which is, pretty big. It can really change those numbers quite a bit. And then obviously just being able to reduce expenses as well on the management side also would, help with that as well. You guys got the rent growth forecast here for 2025. This is what we're planning on doing. And then the outlook, it's just our projection of what these two assets are going to be looking like and how we feel about them in that sense, just because of the strong underwriting that we already did for the assets themselves. Now we're going to go into the why these areas are so good. So these areas have a lot of development that are coming into the area within the time hold that we are actually holding them. One of the two biggest ones is Google, a data center, is going to be putting about $1 billion investment right there in Kansas City. And they're already in 2024. So that's going to create numerous amount of jobs. When we're looking at assets to pick up, this is important to us because what we're wanting to do is, are we going to be able to keep occupancy up? Can we bring the rents up constantly and consistently? What's the demand in the area for multifamily and tenants and the people moving in and getting these new jobs? And so when there's a lot of development going on in the assets that you're investing in, that's a really good sign of you have something good in your hands. I mean, when a company like Google spends the kind of marketing that they spend to find a area where they want to go ahead and drop $1 billion, they probably spent a couple of million marketing and researching and doing a lot of stuff in order to find the perfect spot where they want to go ahead and drop that $1 billion. And it happens to be right where these assets are going to be located. So that's a really good sign already alone. Berkeley Riverfront development, they also have the same thing going on. They got about 800 million mixed-use projects featuring residential units, public spaces, retail establishments. They already began construction and it's about to go through completion phase by 2030, which is when we're offloading. So it's this perfect timing on their end for that, and hopefully that timeline works in our favor. And then you have the streetcar expansion in Kansas City as well. They're going to be completing early 2025, so that's really around the corner. So that's already impacting the area. So these are just things that we look into when we're picking our deals because they're important to know how good the holding period is going to be for us and how consistent we're going to be able to keep those numbers projecting in a better direction. Do you guys have anything else you guys want to input on this deal overview for the Red Point Apartments?
You're good.
No, I think you got
You guys
it.
can go into this. Yeah.
Yeah. You covered.
You guys want me to go? I can go. I could keep going.
Yeah, I think you
I want
covered it
to
all.
make sure I'm sharing the spotlight with you guys.
No, that,
So,
if you can enlarge it, just for a second, that picture.
yeah.
All right. As
There
you
we
can
go.
see,
So
with
this
our-
is Red Point right here.
Right, Red Point is one of the properties that we will be acquiring. And it's, you can see it's surrounded by all famous outlets and museums and all that, and it's in Central City. Also, you can see here is a W apartment. It's not by accident, but it's also one of the property that the same seller is trying to sell. And it's also in our backpack, because we will be looking at that property at the time of inspection. Maybe we can add that one to our portfolio. It's not the biggest one, but it's in good shape and in good location. The size of the property is 12 units anyway. So it's just for reference points at this point.
Got it. Nice. Yeah, this is a great location, guys. I mean, just look at all the things around this apartment, which is, very important, and then the stuff that's coming in for the development side over the next couple of years is going to really make a difference. Now, this one is going to be Red Point apartment, which is in Kansas City. It's a 22-unit building, like Roman said, located right in Midtown. It is a very hot, growing neighborhood. Again, we've been tracking the stuff that's been going around in the area. The cool thing about this property is that it's already been updated since 2020. So it's pretty much turnkey right when we get it in our hands, which makes it, again, really nice. We don't have to do this add value and renovation in order to, see the numbers come in, 2 or 3 years later. We're wanting to see numbers come in the moment we close this deal. So it's going to make it really nice for us. They got washer and dryers in every unit. Cool thing, it has solar panels as well on the roof to cut utility costs. So that's a really good benefit already, because technically that falls on the asset itself. And it's a gated parking community, so that also is very curb appealing to a lot of tenants looking for a place to stay. Now the location, like I said, you guys, is phenomenal. It's close to Kansas City Art Institute, like Roman was saying. We got Rockhurst University right around the corner. UMKC, the KC streetcar is expanding just a block away, which is big in that area. That means better transportation, more foot traffic, more value for the asset. This is a B-class asset in a B plus neighborhood that's going in an A-class direction. So that is huge, huge news and great news when you're picking up a property like this. Is there anything else that I need to add? I'm pretty sure that really just kind of goes over the overview of the surrounding area in for the asset. The next one we have up is in Topeka, Kansas. Same thing here, guys. This is an hour away. The development here is really good. Target is one of the biggest ones. They dropped about $80 million investment alone on a distribution center already in Topeka. It was completed in 2024. That created 600 jobs right off the gate, and those jobs are filling as we speak, and it's bringing a lot of residents into the area. So that's really good for us because it implies that we're going to have, that 90, 96, occupancy that we're, trying to look for at all times consistently. The Margaritaville Hotel, they also put $100 million in development for tropical theme amenities. That's set to open this very summer of 2025. They're going to start that, and it's anticipated to boost a lot for us. A lot of tourism, a lot of visits. So that's good for the area, obviously. And then, of course, the we have major infrastructure projects that the city's doing to improve traffic flow and safety in the downtown area of Topeka, which already started in 2023 and it should be completed by 2026. And that's going to allow for a lot of transportation flow to go very well, which yields a lot of job opportunities to people to commute back and forth. Now the overview for the capital deal. Let me just go over that real quickly with you guys. This is a 36 unit studio, 1 bedrooms and 2 bedrooms assets. The whole place was renovated in 2022, so this is even newer. Then again, not having to touch anything, turnkey ready to just go ahead and net cash flow. We're walking into brand new flooring, granite countertops, stainless steel appliances, updated plumbing, electricity, just the works. It's clean, modern, turnkey. That's the best part about Topeka. It's probably my favorite right now as well. Very, very, very good building. What we're going to go now into is probably breaking down the numbers, which is really what you guys want to know. But Tim is going to kind of break down how the structure of the business is going to work for these assets and the investment opportunities of these two before we go into breaking down the numbers for you guys. So he can probably go over that a little bit with you guys.
Thanks, Marco. So the business structure that we came up with is basically a main LLC where you've got shared ownership by the general partners and the limited partners. And then under that, you've got LLC ownerships for each property individually. And so how it works is the investment would go through the main LLC and then would be allocated to the properties themselves. And really, if you go, so the opportunity, right? We've got two units here. The Red Point in Kansas City, Missouri, 22 units. The asking price was $3.3 million. We were able to get the purchase for $3.075 million. So a pretty substantial discount that we were able to negotiate with that. Capital raise, $1.1 million. We'll get into the sources and uses for that. Our calculated total return around 20%, with a cash on cash greater than or equal to 8%, with a preferred return of 7%. With the Capital Apartments in Topeka, Kansas, is a 36 unit. The asking price was $4 million. We negotiated to a purchase price of $2.8 million. So a substantial discount in regards to that. As you can see, 30%. The raise with that around $1.1 million, total return of 24%, and a cash on cash that we've calculated of greater than 10%. And also with that, a preferred rate of return of 7%. So one of the advantages too is that these provide a 7% preferred return from day one. So that's one of the uniquenesses that we found with these properties in this type market. Next slide. So how are we going to use that investment? So we broke it down and we separated the two. So for capital, it's around $840,000 down payment, right? You've got closing costs associated with that, around $70,000, right? The loan points associated with it. We've got the insurance coming in around $25,000. The acquisition fee itself around $84,000. We've put in a CapEx around $30,000 for some cosmetics that need to be done. As mentioned, these are fully renovated complexes. They're renovated in 2022. For the Red Point, around $876,000 down payment, right? Closing costs around $60,000. The loan points, 22 First year, your insurance comes in around 20,000 with acquisition fee of 92,000. And again, with this, we put a $20,000 CapEx as well for cosmetics, and we'll go into more of what the actual units look like and the exterior as well. So how will we execute and what will be the strategy? So for the capital apartments, we secured a 30-year fixed rate loan at 6.5% interest. We've put in as well as the possibility of a refinance at year 5. With that, right, is we want to we'll increase rents to market as we move forward. The other thing as well is we're gonna maximize the NOI by going in and reducing expenses. We see a lot of room to do that here, and we'll hold it for about 5 years. With the Red Point, what we've gained is we've taken over an assumable loan at 4.1% interest rate until 2030. As well with that, we'll increase rents to the market average. And we'll further evaluate maximizing the NOI by reducing expenses. And again, we'll hold this for 5 years. And so when we get into kind of the interior of them themselves, so Red Point, right, it's a 22 unit. You've got 10 of those units that are about 1 bedroom, 12 or 2 bedrooms. Right, it's been fully renovated in 2020, and that's including flooring, cabinets, stainless steel appliances. There's granite countertops in each unit, new roofs. They've gone through mechanical, electrical, and plumbing, all that. Some amenities associated with this property, right? There's gated parking. There's a fitness center. There's lockers that they can store their personal items in. There's a washer and dryer in the units. The other thing too is there's owned solar panels on the apartment complex itself, so that can help reduce utility costs. The other thing we're looking into is the solar panel as a green technology tax benefit, so it's something that we're researching as well. And again, right, we've assumed a loan at 4.1%, which is quite good in this current market. For the capital apartments, again, 36 units. We've got 12 studios, 12 1 bedrooms, and then 12 2 bedrooms. This one was renovated in 2022. Again, kind of the same thing. Flooring, cabinets, stainless steel appliances, all granite countertops. There's new roofs. Again, they've gone through all the mechanical, electrical, and plumbing. The amenities as well, gated parking, again, and then there's washer and dryer in the units. This as well has solar. So again, there's another benefit that we're looking into using solar in terms of utility costs as well as tax benefits. Next slide.
I can take this one. Okay. Sensitivity studies, sensitivity analysis is really important to see what kind of risk we have in. And it's all based on what market dictates. And we made it a little bit more conservative than what market is telling us. So it's based on a few components, few variables. One of them is rent growth, occupancy rate, and cap rate exit strategy. And also what is most important, at which point we will be at break-even point. So break-even point's very exciting because it shows as of right now, as of underwriting, vacancy at vacancy rate of 37%, we still will be able to pay all the expenses, including mortgages and all associated expenses. So the base case study was done and based on underwriting. It's a 3% rent growth year over year. In this case, we will be able to pay cash on cash 8.7 or better. In conservative case, if let's say for all holding period of 5 years, we'll have zero rent growth. we still will be able to pay our investors at least 6%. An optimistic case, which is kind of the trend on the market, dictating like 5% growth. We're in good shape, having cash on cash around 11%. The same one goes to occupancy rate. The underwriting was made based on 8% vacancy. And it's a little bit more than what market's saying. And in this case, we're still good on paying our cash on cash. The stress case is occupancy rate is built at 80%. For difference, for whatever reasons, I don't really consider anything like that happens. But in this case, we still having options to pay full amount of cash on cash return. And in strong case, of course, is 3% vacancy rate, and our cash on cash is more than 11%. And we're looking also on the cap exit strategy, at what cap rate we will be selling it. So the market is saying that we between 6 and 6.5, because it's also, as it shows on previous slides, between 6 and 7%. So based on that, we're looking at annualized rate of return between 23.5 to 29% annualized return to investors. Yeah, you can go to the next one.
Beautiful. Yeah.
That's, yeah, Jim, can you pick it up?
Right. So what we're showing is our 100,000 investment projection for a 5-year period. Right. We're honoring the 7% preferred return over the 5 years. Right. That would equate to $35,000 cash. Upon sale, and this is not to imply a refinance, but on sale, right, return of the capital, and then projected profit of a little over 77,000. So basically on your $100,000 investment or more, right, your projected return or total cash return would be $212,510. So it's quite a significant deal in terms of cash you'd receive for this combined deal.
Absolutely. And guys, let me just mention here, let's just go and talk about what makes sense as well from a tax standpoint, because projections are just the profits. It's not including anything else, right? So if you made good money and you're looking for ways to offset your income legally, right? This is a deal that can actually make that happen to you. It's as a real partner, you get to ownership in this asset, and with that ownership comes a lot of depreciation through cost segregation, accelerated depreciation. We may pass on paper the losses that can reduce your taxable income. Now, depending on your situation, you could use those losses to cancel out gains from investments or even your W-2. And that's a big reason for high net worth individuals that invest in real estate, because that alone is extra money in your pockets that you are pretty much putting in your pockets every single year as you hold with us over the long haul of the 5 years. And when you really look at your total projection returns, it's a lot higher than what we're just kind of giving you here, which is kind of like the front end of the numbers, right? You guys can see it from a 100K per perspective. Now, the other thing that I wanted to go ahead and mention as well, guys, is that these assets, they're not just in areas where they're stabilized and they're doing well. The area itself is also impacting the assets in a positive way. Like for Topeka, just within the past year alone, the market rents have grown over 5%, which is when you think about the where it's heading and the things that I just went over of the development that's coming in, it can only go up further, and that's going to allow for easier rent increase. So that's really good news for the Topeka area. And then, for the Kansas City, it's booming as well because, there's been probably a 1.4% from what I've looked into in the research of job growth over the years. And the unemployment has only been about 3.4. So it's a really good projection of what I'm looking at when I'm looking at these assets. And I think from what I read on the reports that I still have, I have them on a zip file. There's about 12,000 individuals that just moved into this area just last year alone. So the development is bringing a lot of people from the outside skirts into these area where the assets are at, and it's making it very lucrative already, without even going into acquiring the assets 5 years on a hold. We're just getting into year one, and all this stuff is already happening before we even get into it. So it's good to keep that perspective in, because that's kind of also things that we haven't projected for when it comes to these numbers. These numbers are being projected on a conservative basis, guys. We're specifically so that we are looking for your best interests. Anything from here, just an upside. So, keep that in mind when you're looking at these numbers as well.
Yeah.
Sergio, you want to go over the risk analysis real quick?
Yeah, let me see here. So I think you can open that up there. Yeah, so healthy market, forward looking. What that says to me is the cap rates are steady. When you see increasing cap rates, it means there's less demand for this product. Multifamily cap rates have been pretty steady in this market. They're hovering around that 6.5% mark. So that's kind of where we intend to exit this when we reposition it for sale in 5 years. So that is the main thing we're looking at for the exit there. A few things to touch on what Marco was saying is there's also Kansas City's also getting a new Amazon fulfillment center. Amazon just purchased a 1 million square foot building, going to be about 12,000 jobs there. And that's because Kansas City is a major distribution hub. So, there's major arteries going through it. So, that is obviously a growing trend there. Landlord friendly state. So, evictions, tenant landlord law will be pretty favorable to us. Like Roman said, we have properties in other states, and it's nice to be in a landlord friendly state. Now this is a stabilized property, so I don't think we'll really need to get too far into that. Because we are going to be taking on some good stable assets, and we won't have a lot of or any evictions up front that we know of. So mitigating the risk there. Occupancy is good. We think we can improve that as well. The occupancy in the market is very high, which is the main indicator of what we're looking for. What are similar properties renting at? What is their occupancy rate? So occupancy rates high into the 90s in that market, in both markets. So that's a really big metric for us to look at is occupancy rates. Some investor considerations, general partners. Yeah, so we've always returned capital and gotten our limited partners a turn to profit. We've never lost investor funds, which is really important to us. Yeah, and we have some excellent attorneys that we're working with on the SEC side, the security side. So everything will be, we have a pretty good legal team in place. So everything will be, all requirements will be met, and any questions that you guys have could also be answered quickly and from our counsel as well.
Yeah, also I just want to mention that we've been looking for that type of property for the last 2 years, and in today's volatile economy, to find something that's stable as this one is really, really a rare opportunity. And that's what we like about this property. It doesn't require too much of improvements, and it's stable and very well maintained.
Yeah, so we're very transparent and communicative. So how we'd like to move forward with investors is we would set up quarterly Zoom calls, and the design would be is to discuss anything and mostly everything related to the property performance, answer any questions that any of you might have. We'll have emails being issued on a continuous basis that would provide updates of the operations as well as changing market conditions. We'll have a review to discuss performance, about budget, if there's any other needed things with property itself to be changed. So there'll be, a very detailed financial report. And then we'll have with that as well projections associated with that. A big thing as well is asset management review that we'll do quarterly. So we'll take a deep dive into the property management, the activities, what's going on, any improvements that might need to be done. Again, these properties have been fully renovated, so we feel, and those investors that we've spoken to really appreciate the openness and communication and transparency associated with that. So we want to continue that on with all of you. And so.
Thank you, Tim. Thank you. So let's just recap real quick, because this is where we kind of go into the deals, right? So as far as risk goes, we're always going to be conservative on our numbers. It's just any investor, I've learned over the years, and these guys who have many years of experience, we learned that going into something conservatively is the best thing you can do. So always go with the lowest numbers that you can, because if it works with the lowest conservative numbers, which, we did show you there, our numbers based on lower than actual rents. We plan for vacancies, but even with the stress test, worst case scenario is even in that situation, we're still cash flowing. Our cash on cash is still where it needs to be to make sure that we're taking care of our investors. So, going into it, it's one of those things where its risk tolerance is not high. Is right where it needs to be. It's perfect for any starting investor that wants to go into a commercial real estate ownership for the first time. This is one of the best deals, in my opinion, currently that I have in my hands that would be really good for a first timer. Now, what do you get with these assets investing with us? Well, that's easy. Cash flow. Cash flow is important every quarter. Is kind of how we're planning it. Equity on the property, because these do tend to have really great upsides when we exit on them, and you guys get to be on that journey with us, on that ownership. It's a 30-70 split, so you guys get most of that upside, which is great. And you get depreciation benefits. It's probably one of the best ones out of everything in here. It's one of the best ones, in my opinion. I've been able to write off thousands and thousands, hundreds of thousands of dollars just being able to offset from my assets, the depreciation, being able to just write off that cost. It's a huge benefit. And full transparency, along the way, you get to build relationships with us, because we get to see you every quarter. We get to talk to you. We get to, inform you of the asset, be able to just do that along the way, the whole 5 years, which is going to allow us to, get ready for something even nicer and juicier right after that. I do want to mention that I do want to also, even though we have a 50K entry and a 100K investment projection showing here, we do have a preferred placement for, any investor wanting to come into this deal with a 300K or above investment. We want to make sure that the investors that are willing to take more doors, take the partnership more seriously, we want to make sure we take you under our wing and give you, first front, VIP access to the assets, walk you through the deals in person, fly you out, break down the deals for you, be able to have some deep level conversations to what it is being in the commercial real estate space, what it takes, giving you some, pure values, just 100% values that you can walk away with from all these experienced individuals, including myself, who, have been in the game and have done plenty of deals. You get to, ride that with us, front row. So we want to give you kind of like the red carpet VIP experience and kind of give you something to really remember. We're going to be recording the whole thing. You guys are going to have personal interviews. All the content that we record will be broken up, completely edited for you. You guys can also use it as being able to leverage it, being able to go somewhere and say, hey, I own these 58 units, in Missouri and in Kansas. Be able to put those on your social platforms and us give you exposure can open up a lot of doors, believe it or not, to a lot of different things that you would not expect. Some of those things can be just completely surprising. The opportunities that come at the door from just having those type of things given to you. So I just wanted to just open that concept to you guys, so you guys are aware that there is preferred placements as well for our investors who want to invest more into these very stabilized units. Now, I do want to kind of open up the floor for you guys now that you guys have been watching for any questions that you may have for any individual here or the assets themselves, so that we can answer, maybe go into a deeper conversation with that question for you. You guys can, maybe in the chat, throw up a thumbs up or emoji or something if you guys have a question. And we'll be more than happy to answer it for you. Or you can unmute and just ask the question as well.
Hey guys, thanks for the presentation. That was awesome. Is there a requirement to be a real estate professional to invest in this opportunity with you guys?
If you're talking about from FCC standpoint, if you're talking accredited investors or sophisticated investors, we would love to deal with accredited 506C. We can take 506B as well. That shouldn't be no problem.
Okay.
So to answer the questions, there's opportunities for just about everybody. Michael, if that answers your question. Obviously we do prefer any investor, grabbing these types of assets as good as they are, we prefer credit investors and things like that. But the good thing is that anybody who's just starting can go in. I mean, we have a minimum 50K investment. Anybody who just wants to get a piece of the action can still jump on here. And I have a lot of relationships, with a lot of unaccredited investors, and they all want to come, kind of come into this. It's just a matter of whether they have, the funds to get into at least that 50K entry.
Sure. You guys mentioned, I think that you also play in like the subsidized housing market. Is there not an opportunity for that with these investments?
This one have 1 or 2 subsidies, but not a lot. But because that's a B-type area, that doesn't really qualify that to be on the subsidies. And that's why I just mentioned it because we're not shy away from the subsidies. We like bureaucracy, and especially Section 8, because I've been doing that for the last 20 years. I know how to deal with that. I know how to collect rents, and I know how to communicate with Section 8 personnel. Actually, on that point, you have better leverage on your tenant base if you're on Section 8, because let's say if your tenant is not paying his portion, and that's what we love to do, at least he has to pay at least like $50, $100, at least something from his income. But if he is not paying anything, you have rights to call his caseworker and tell them that their client is not doing their parts. And first thing that what they will do, they will ask him for 2 weeks to correct it, and after that they will take him off the program. Nobody wants to lose the money, free money for $100 hiccups. So that's a great opportunity if you know how to handle it. And obviously,
Thank you, guys.
it's a little bit more on the Section 8 or any subsidies. Of course, it's every year inspection comes in, and you have to allocate at least 1 month for renovation, because the task for inspector to find the problem. He will always find the problems, but it's not a big deal. Dealing with that.
Good question. Good question. I appreciate that question, Michael.
Sure, absolutely. Thank you for questions. As you can see, we're all breathing and living all this business. That's what we're doing 24/7. And I guess we do have experience in that. We're also part of different communities. I'm also part of one community that I'm coaching other people. So we also, in anything that you want to know about multifamily, we're open to educate you. And I know that a lot of people having a lot of questions, and I love it. We can do that.
I have a quick question. Thank you for the presentation. My name's Naomi. I've been working with Marco on some private money lending deals, but yeah, no, I was just wondering, and I don't know if you had mentioned this, but what class kind of are these properties, like the neighborhoods in? You know, are they sort of B or C, or can you address that a little bit?
Sure. We have a special tool that's analyze the property and areas, and both of them in B class a neighborhood, and it's obviously from what you saw, since it's been renovated, it's a BB plus type of assets.
Okay. And have you guys looked at the walkability score on these areas?
They're
Walkability?
super walkable. They're very highly walkable.
Yeah, and that's CoreStar report shows that as well. So we don't have that presentation, but if you will be interested, it will be in the deal room.
Yeah, it will be. Yeah, we have a whole detailed package, for anybody that wants to look way more in depth than just the presentation. We can't cover these. It's 58 units, 2 different properties. We can't cover all of this stuff in detail.
No, I understand.
But the package does have all that. I mean, these things are. You can do a lot of stuff just from walking from the apartment alone, from stores, food, groceries, like a bunch of stuff.
Okay. And sorry, I keep asking questions. And I just lost my train of thought. Oh, so I'm sorry, I was kind of in and out, but in terms of exit, are you guys thinking 5 years for both of these properties? No refinancing?
It's always a possibility. Always a possibility to refinance. The reason for one of the property to be held for 5 years, or almost 5 years, because it's assumption loan, and as you know, assumption loan comes along, as any other agency loan, comes along with prepayment penalty. And
right,
because in this one is prepayment penalty is yield maintenance. We don't want to start with a huge bill at the time of either refinancing or reselling.
okay, so that one for sure will at least be 5 years, but is the plan to exit in 5 years?
Yeah, if that will make sense, if it will make sense. Usually we hold in it for 3 to 5 years.
Okay, but if you don't exit, then what are options for investors?
Basically, one of the options, and correct me if I'm wrong, if we will refinance the property, we can return if not entire, but most of the investment back to investors and reduce their liability, or and that's and keep running that property and benefit from that. Obviously, the split will be different, but you will have, if let's say that if you will return all your investment in a couple of years, in 3-5 years, and you will still have a little bit of cash flow coming in. It's endless percentage wise.
Okay. Okay, thank you.
Good
No,
question, Naomi. Thank you. Do we have any more questions? Well, if we don't have any more questions, I do want to also be able to let you guys know these are obviously equity share ownership, great assets. The number speaks for themselves. There's not much I really need to sell you on. If you're already an investor, you know what a good net cash flow asset looks like and a stabilized one looks like. The detail package that we sent out whenever you requested, which I'm going to go ahead and provide you guys with the link, so that you guys are able to go ahead and ask for anything that you need. I'll provide the link in the chat here, and you guys can just click on that link and be able to access this same presentation here. And there's actually 2 buttons at the bottom. Schedule a consultation, which means that's me just talking to you and then sending over the detailed package. There's also a form that you can fill out where you can just go straight and fill out form and invest with us. It goes over a couple of questions just to see where you're at, and we'll reach out to you and get in contact with you. So this is straight equity 730 split type of deal. Very, very conservative, and the risks and red tape around it is just minimal. Now, there is another opportunity for those that are looking for a short investment. I know Naomi was thinking of maybe a shorter route, maybe a 3-year exit. We do have something like that as well. We have another multifamily unit out in Texas at the moment. We are closing in on this one very quickly, and it's a smaller investment that we need to pretty much bring to the table. It's a $400K investment. We're looking for $400K as debt for a debt lender. We're okay with doing 12 months for this. We would be okay and would be, willing to give that debt lender even a little bit of some profit sharing on the backside if they were to roll with us 3 years for this deal, so that we can exit in our favor. Right now we're offering a $400K spot for this quick, easy deal. We pretty much are holding most of the risk on this, and then the investor that comes in, you're going to be able to at least do some debt interest on this, and you'll be able to get a, possibly if you ride the whole 3 years, get a kickback on the profit sharing equity net of the deal when we exit, which, to give you an idea, it can project anywhere from a 1.6 to 2x multiple. Just to give you an idea of what that looks like, it's a pretty nice deal. And if you're interested, again, this link that I put in the chat room, when you go into invest with us, it'll have information for you to answer questions for this deal, or you can schedule consultation. I can send you a detailed package as well, so you can see what this one looks like. It's a lot more simpler, a lot straightforward, way less risk, because you're not owning, you're lending, you're just a lender, a debt lender. So it's straight profits for you. There might be some capital gain benefit there for you as well on the kickback if you do ride with us 3 years.
Yeah, Marco, I just want to add, so this 22 unit property is in Texarkana, Texas. So this is 3 hours northeast of Houston and about 2 hours east of Dallas, right in the northeast part of Texas, right on the border. So great little location, great property. Yeah, there's a map there.
Yeah, and this is also, guys, just so that you know what this asset is. It's just as stabilized as the ones that we went over. You know, we really like going after properties that we can just get into day one and start just net cash flowing and being able to pay out proceeds, you know, within, you know, the first quarter that we're into the deal. So, you know, this makes sense as well for a debt lender because, you know, the security and, you know, the risk tolerance of this deal is way better than probably going into a flip, you know. That's how I would see this. And it has more benefits than a flip will even give you in most cases. But we have a whole breakdown, whole pitch analysis deck here for it. And we have the financials as well. We have the T12s. We have everything that you guys need for this. If you guys wanted to look into something a little quicker, a little shorter term, you know, to maybe dip your feet with us, see what it's like working with us, and then go into some amazing deals with us after that that you can roll into. Does anybody have any specific questions that maybe have to do with this specific deal here, or, you know, the terms or anything like that?
Or what our vision is for as we move forward. I'll just add, in talking with investors over the past year or two, we found that a lot of them are seeking cash flow, immediate cash flow as well. And so we've really put effort into targeting these size and these type properties for that cash flow initially and as well as over time. So it's a good little niche that we found in parts of Texas as well as the Midwest, and there are a lot of properties like this that we could go after for investors. Our background really shows we've been able to operate quite well in them. So this is kind of our vision as we move forward, these type properties, and so we hope you join with us.
Absolutely. Thank you, Tim. Well, I wanted to thank everybody who came today. If you have any questions additionally that you end up thinking down the road, again, just click the link there, save that link somewhere. I'll make sure to post it out on my social platforms as well, so you guys can still have access to that link. And just, you know, schedule a call if you just want to have a deeper conversation, go over, you know, what kind of terms, you know, we can give you and things like that. It's just a matter of just having that conversation. So feel free to schedule a consultation call, and we'll be more than happy to, you know, get into that call with you and answer, you know, your questions and give you, you know, breakdown of the terms that we're, you know, looking into, and see if that, you know, fits within your line of what you're wanting for terms. Aside that, guys, that's pretty much it. We will see you on the next one. Just stay on the lookout. My platforms and IG is Marco Money Gems. You guys can follow me there. I'll be posting more live events, more deals for you guys, so you guys can look into. Or you can look me up on Facebook as Marco Rivera. Same with these fellas. You'll be able to most likely find them just by their name on most platforms. So you guys have a great evening and enjoy. Thank you for coming.
Thank you, everybody.
Thank you
so much. Very much appreciated.
Thank you very much for your time.
Have a good night.
Thank you. Thank you. Roger, stop recording.